Welcome everybody, and thanks for joining our webinar entitled The Digital Evolution in Treasury Management, What Commercial Businesses Need to Know. This is jointly brought to you by BankUnited and McKinsey & Company. My name is Adam Hoffman. I'm Executive Vice President and Head of Treasury Solutions at BankUnited, and I'll be moderating today's session. I'm really excited about today's webinar. We've got a great series of speakers lined up. Joining me is Evan Long. Evan is a manager of solution delivery in the GCI Analytics office of the banking practice within McKinsey & Company. Hey, Evan. We also have Jackie Coffin. Jackie is Senior Vice President and Head of Treasury Solution Sales at BankUnited. And last but not least, we have Joe Izzo. Joe is Managing Director and Head of Treasury Solutions Product Management at BankUnited. In terms of the agenda for today, so Evan is going to walk us through a presentation about how the treasury management space has evolved over the last several years, what sparked these changes, how these changes have transformed user expectations, and as a result, what solutions have we arrived at. We're also going to talk about what the implications are for commercial businesses, both now and in the future. Now, throughout Evan's presentation, we're going to hear from Jackie and Joe. They're going to provide some color and some context on Evan's industry observations. Jackie will be focused on the voice of the customer. She's interacting with clients on a day-to-day basis. Joe will talk about how Evan's industry observations and Jackie's client observations have translated into actual banking solutions. So last thing I'll mention before we dive in, while microphones are muted for all attendees, we do have the chat feature available to you. You should see a little balloon chat icon at the bottom of the screen. So feel free to share your thoughts, your questions, and my job will be to relay it to the broader audience, both during the presentation, and we do have some time set aside towards the tail end, dedicated for Q&A. So with that, Evan, I'll pass it over to you.
Great, fantastic. Thank you, Adam, so much. I'm going to go ahead and bring this document up that we'll be going through, so hopefully everyone can see that. So I just want to say a real big thank you to Adam, Jackie, Joe, the rest of the BankUnited team for inviting me to come speak to the group today. I think, where we are in terms of, finding what a kind of a new normal is, in the way that we interact with each other, the way that we run our businesses, how they're operated, how we're, new ways of working. I think this is an extremely relevant topic that we're talking about today, and how that impacts, something like treasury management. Just a little bit of background really quickly on myself and where I come from within McKinsey. So my name is Evan Long. I am an expert and manager of solution delivery out of the GCI office of McKinsey & Company. GCI is basically a specialty office within the broader firm, where we do focus specifically on kind of banking analytics and benchmarking, in which, specifically within the commercial banking space, with a really deep focus on treasury management, commercial payments, commercial liquidity. And kind of over the years, we can help a lot of banks advise on what their product strategy is going to be, using a lot of that deep analytics, our understanding of corporate payments behavior and liquidity within treasury management. So that's a little bit of a background that kind of feeds a lot of the insights that we're going to be going over in today's presentation. If I was to back up a little bit, and I kind of, obviously with a lot of what's happening in the world right now, near term has caused a lot of change. But if we were to kind of back up and look at payments more holistically, payments has transformed a great deal over the last, let's say, 30 to 40 years, right? So if we were going to think about kind of what the payments experience was like, dating back even to the 1980s, right? Payments, as we would call it, we're referring really to, the instruments, the delivery mechanisms, maybe even the networks or the players involved with facilitating the money movement of a payment, right? This could be kind of really heavily driven by check, a lot of kind of paper-based processes or tools, instruments, and manual processes involved with that, but a very friction-filled experience, I think we would all say. Where we've really seen the transformation over the last, again, kind of 30 to 40 years, we're to fast forward kind of really the 2020s and where we are now, have been driven by digitization and creating an experience that's much more seamless and integrated into an overall commerce journey, right? So as opposed to payments being this, standalone experience that is oftentimes somewhat frustrating and again, manual and time consuming, something that actually facilitates the underlying economics and the underlying commerce that's happening there, right? Again, I think these are trends driven by the digitization that have been happening for quite a while, and that we have definitely seen acceleration happen over the last 12 months, let's say, with the pandemic. So with that in mind, again, specifically when it comes to treasury management and the way that we've seen corporates interacting with the treasury function and the way that they manage their payments and liquidity, what we've seen within COVID has been a real kind of shift to more digital and electronic instruments and channels, right? So ACH, commercial card, various fraud products, online banking and mobile banking. These are all things that we've seen anecdotally, but also through a lot of our benchmarking as well, and understanding again the underlying behaviors for a lot of these corporates. We've seen significant shift over the last 12 months to these electronic and digital mechanisms, right? And when we went and asked a lot of the banks that we work with whether they see this as a blip in the system, essentially, that will go back to what pre-COVID behavior was looking like in terms of heavier reliance on check and branch networks and things like that. What we heard from banks was that no, we see this as more of a permanent shift, right? People, corporates, and small businesses are using this as a kind of a fundamental way to change the way that they're interacting from a payments and channel perspective with their banks, right? I think not unfamiliar. It seems a little bizarre that maybe some of these crises like COVID bring about some of these greater changes, but it's actually nothing that we haven't necessarily seen in the past. I think back to like 9/11 and the Check 21 initiative and a lot of what that spurred with the digital exchange of check images right there, right? Sometimes it takes these shocks to the system to create pretty significant changes. And I think kind of what we've seen over the last 12 months and what do we expect to happen in the future.
Evan, when I think about it from my own personal experience at the bank, I certainly agree with what I see here. There have been desires in the past to shift behavior, but sometimes you need an event like this to really force the change in behavior. Now, that's from a banking perspective. Jackie, I'm curious, you're talking to clients every single day in lots of different industries. Does this align with what you're seeing in talking with clients? And maybe you can share a little bit of just firsthand examples.
Sure. Yeah. So at first, I think we all saw the shift that, this is, let's just survive the 2 weeks or 30 days that it was initially going to be. Let's get mobile access if you didn't have it. Let's install drivers in your home computer so we can get your remote deposit scanner up and running. So there was a really big scramble initially. Had it not been this longer term period, maybe we would have gone back to business as usual if it was only 2 weeks, 30 days. But what we did find was kind of in that second phase when we all settled in, we started having those conversations with our customers after, let's say, 3 months in a remote work situation, revisiting how everything was structured. Perhaps we need to make payments with ACH. Maybe we look at card if we've never used card before, or even immediate increases on card issuance is what we saw a lot of as well. Looking at payables and receivables holistically is what we see businesses doing, even just reconciliation, how they can be more efficient. This is a consistent theme throughout, and we had the pleasure of partnering with many of our customers and prospects to open those conversations. So absolutely consistent to what you're seeing, Evan, across the market.
No, thanks for that color, Jackie. I think it's good to hear that it kind of resonates with what you're hearing in the market as well. So I think let's maybe push on a little bit, and as we kind of think about more of these digital trends and digital innovations, really, and by no means is this fully exhaustive, kind of thinking about this, three main trends I think really boil to the top when we think about the digital innovation in regards to treasury management. And again, I think a lot of these predated COVID. A lot of these trends have been in the works for many years, and I think the way that Jackie was talking about in terms of a holistic approach to payments, but really have accelerated over the last 12 months. So one of those is just redefining the customer experience. Another is around navigating a quote unquote new liquidity environment. And then the last is around finding efficiencies within the financial value chain. And I'll explain what each one of these means. And we have a little bit of, deeper dive on each one of these as well. But in regards to the first one, the redefining of the customer experience, I envision this something that really kind of sparked kind of within the early 2000s have kind of evolved over time, as a lot of these consumer-facing tech companies have really kind of set a new bar for what we as customers and consumers expect, even in our everyday lives, aside from thinking about yourself as potentially a CFO or corporate treasurer or someone in an accounting function. We have this new set of what good looks like in our daily lives, and we want that to translate to how we can manage our business both faster, easier, more efficiently, right? And that was kind of really brought on by a lot of these world-class leading tech firms that redefined our vision of what good looks like in a digital-first world, right? And they're using a lot of technologies that I think we've heard, sometimes they're a little bit buzzwordy, but are actually very kind of powerful underlying technologies around APIs, cloud, robotics, AI and analytics, and also specific to payments, kind of RTP, which, it's real-time payments, kind of a new payments rail that's being introduced and slowly adopted in the US. And what all of these do, very powerful, in their own rights. But when you can start to stack these on top of one another, you get a multiplier effect that can really be powerful in redefining customer journeys at the bank, your interactions with the bank, but also what you're doing kind of in your everyday operations within your organizations, right? So that's what we kind of mean by redefining the customer experience. Number two is navigating the new liquidity environment. So really from a financial crisis until present day, we found ourselves really in an extended period of time of historically low interest rates, kind of a high demand for working capital. And especially recently, I would say kind of a little bit of a rising worry around inflation. So what digital innovation has done, specifically in treasury management and managing liquidity, is providing more tools, more insightful tools that will help you as corporate treasuries enhance your site across either multiple banks or multiple products, and how to better deploy those funds so that you have the appropriate coverage that you need to meet your daily obligations, but also to maximize returns, right? And one of the more interesting things I think we've seen over the really last probably 6 to 9 months, there's a lot of companies opening up their acceptance and their mind share to cryptocurrencies, like Bitcoin, for example, both as a form of payment and accepting those, but also actually more so as an alternative form of investment in holding liquidity. Right? And the last one here is around finding efficiencies in the financial value chain. So this is a big one that a lot of organizations have been focused on is can there be more end-to-end solutions that will allow me to streamline processes in a more straight-through processing way, digital way, that will actually allow me to reallocate resources within my organization, right? So this idea of a lot of kind of this value chain being based on a world of, the 1970s, 1980s, in which there was a lot of manual paper-based ways of having to do those things, and a value chain being created around that. Does that need to be the case in the 2020s, in which we have a lot of better alternatives? And can they start breaking down some of those walls and some of those inefficiencies that we have within our organizations when it comes to that financial value chain? Right.
Hey, Evan, as I think about number one, customer experience is just such a hot topic right now. We're finally starting to see financial services in general embracing the idea of human-centered design, things that the Amazons and the Apples of the world have been championing for many years now. Jackie, I know you've been recently involved in some of these human design exercises. As a matter of fact, I think we have some of our clients that are dialed in right now that participated in some of these sessions with you. Can you maybe just share a little bit about what your experience was like and, just walk us through it a bit?
Sure, absolutely. So the same way we've been seeing our customers' processes change and they took a look and reevaluated the way that they were running their business, we saw that our business and our customers' needs were directly impacted as well. So we would be remiss if we didn't look at our needs as a bank as it related to our customer. So, and our processes. So we started with the voice of the customer and conducted some customer interviews and, talked to them and said, in a dream world, what would this look like? What are your main pain points now? We understood them before, or at least we thought we did, right? And we reacted and built around that. But having that time with our clients and understanding, their customer journey and then essentially their ideal customer journey was really valuable for us to try to refine our processes, reinvent our workflows, and create efficiencies throughout the organization and throughout the sales team as well. So that was such a valuable exercise, and we've taken that direct feedback from our clients to start building around an even better customer experience.
Thanks, Jackie. And I think we're going to hear a little bit later when Joe jumps in on the product side. There are certain things like the cloud and agile that really enable these kinds of client conversations where you can get an idea, go and test it, validate that it's applicable on a broad basis, and then make some tweaks and go back and continue to iterate. These are things that we really couldn't have done 10 years ago. All right, Evan, I think we're good to keep moving here.
Fantastic. And again, great insight, Jackie. Really appreciate you chiming in there. So I think going back to this idea of and doing a little bit more of a deep dive on number one here, this redefining the customer experience. So not to belabor the point too much, but again, this idea that kind of a group, and of course not exhaustive again, but this group of really world-class, innovative, digitally focused companies, mostly on a lot of which on the consumer focused side, but really setting a new bar for customer experience or expectations, right? And a lot of the hallmark features, I would say, or new expectations or enhanced expectations that are coming out of this are around speed and availability. It's around integration, flexibility, mobility, intelligence, and security, right? So I think these are 6 main kind of core components that we all seem to value both on a consumer and a commercial front. And how these have kind of progressed over time, really, when it comes from a financial services perspective, right, is really kind of being incorporated on the consumer side first, right? So you're seeing things, over the years, like a PayPal or a Venmo, or just the way that consumer online banking and mobile banking took place, have slowly crept onto, again, the commercial side of things, right? So for any one of those, I think you can kind of see how your maybe interactions with some of these companies have influenced some of these enhancements. So whether it's an Amazon or Netflix or a Spotify, when it comes to the speed and availability of things and products, right, really enhancing kind of our expectations there, or Uber and Apple from an integration standpoint, right? When we kind of think of Uber and how easy it is to use, and the seamless integration across a number of different components that I don't even think we realize how many different APIs are being connected in the background to kind of create that seamless experience, right? I think these are the types of things that these companies have really pushed that we're now expecting on the commercial side, right?
And Evan, before we switch to the next slide, we do have our first question that came in. There's someone who wanted to get a better understanding, maybe you can kind of expand upon what you mean by availability.
Of course, yeah. So so let's maybe say from a macro perspective in some of these examples on the left-hand side here, and then I'll drill down to kind of more of a commercial payments perspective. So let's say availability in regards to Amazon, Netflix, Spotify, having out of that 24/7 access to stream that content, whether it's movies or music or anything along those lines, or Amazon, when it comes to being able to always access that buyer supplier network, and then have kind of delivery at your fingertips in a matter of a day or whatever it might be. I think that kind of influences our expectations there. But then, as we think about it from a commercial or a broader payment standpoint, we can kind of think about let's say faster payments, for example, right? And what we'll be doing from a real-time payments availability of funds, which will be moving from much more of a batch and T2 or kind of a 2-day settlement type of process when it comes to having those availability of funds at your fingertips to actually use. It'll be to a much more instant 24/7 network, right? So being able to get insights on what your positions are in real time, being able to send those payments and receive those payments in real time, right? I think it opens up a number of opportunities about what commerce looks like in the future when you have these fast and available payments. And just another point on RTP specifically, because I think it relates, is the amount of data that comes along with those payments in terms of what we can do from a reconciliation perspective, but also just kind of the richness of data that's included on those is very important as well.
All right, thanks for addressing that, Evan.
Sure. So it kind of hit at some of these different underlying technologies or enablers that have been enhancing the customer experience. We'll dive into each one of these like too much because I know we have some limited time. But there are kind of 5 major technology enablers that we've seen have had a pretty large impact on the evolution of treasury management. One is cloud, and essentially the infrastructure flexibility that gives to organizations to scale and deploy new products and services very rapidly. APIs, APIs have been around for quite a long time, quite honestly, but this idea of really harnessing their power, at least, especially from a banking perspective, and I talk with banks all day and kind of their excitement around what APIs can do to redefining the end customer experience when you create a more integrative experience across the different platforms is something very excited, and I think everyone is really rushing to create for their corporate customers. Faster payments we just talked about earlier around this new enhanced payment rails built around speed and availability and the data richness and global connectivity. AI and analytics. So this idea I think earlier around intelligence of a new feature that we kind of expect out of our products and tools, right? So how can these products help me understand what the future is going to look like, right? And how can they help me create a more personalized experience, right? So it's really around this AI and analytics. And then lastly, around robotics and the automation of processes. So how can you make them more straight through and taking a lot of the manual processes out that take up so much of our and our team's times, right? So I think those are kind of the 5 major ones that we see impacting the most, but there are also a number of ones that are cutting edge, more cutting edge that kind of aren't on this short list, but I expect to have pretty significant impacts in the years to come.
This actually might be a good time, Joe, for you to jump in to get your perspective. Maybe, there's obviously some great technology here, some that are newer than others. Maybe you can share how banks are leveraging this kind of technology to deliver downstream solutions, and also as you kind of elaborate on that, maybe you can also talk about sequencing. Are there certain events, certain technologies that you have to have in place before you pursue others? Can certain things be done exclusive from one another? Maybe you can jump in here.
Yeah, sure thing. So from the context of today's meeting, one of our goals is to accelerate delivery of products and features that are easier to integrate with our client systems. And certainly we're leveraging these technologies to help realize those goals. Step one for us was to move our banking applications into the cloud. So as of this quarter, 100% of our banking applications are now in the cloud. And that gives us a level of scalability and business resilience that we just didn't have in our previous architecture. So that was an important first step. The scalability, if we have a spike in volume, we're able to expand our capacity without any impact to our clients. If we have a power outage in the Southeast, we're able to move support to another region and have no impact on our clients. So that was probably our first step as far as cloud goes. Next was to start to implement cloud native and near cloud native applications like our Pay Hub and our digital portal, which includes online and mobile. And those types of products allow us to integrate via APIs more easily within our own technology ecosystem, as well as with our client systems. So our clients' ERP systems, their property management software, their healthcare portals, et cetera. So we pick up some important flexibility there. And that starts to put us into a position to accelerate the product delivery itself. On the heels of implementing our Pay Hub mid-year, we'll be implementing our wire transfer system, followed by real-time FX rates, real-time payments, probably first quarter of next year. Those are features that we're able to now implement in a more accelerated fashion as a result of using cloud and API technology. And then when I think about robotics, Adam, that's another important one for us. So I know Evan had mentioned that it's a great way to automate processes, but when we're defining new products and rolling out new products and refining existing products, we also want to evaluate and define an optimized support process for those products. Right? So we're using the bot tool to capture and evaluate the existing processes that we have and identify what are appropriate areas to automate via bot, but also to create the most efficient product support model that we can. I think the other big benefit in the bot space is any reduction we find in manual run the business operational activities just frees up resources to be able to support our now accelerated product delivery effort, right? And that allows folks that probably spend more time on run the business activity than grow the business, being able to do some of the design thinking activities that Adam mentioned previously, like being able to now interview clients and look at market research and do test and learn activities, iterate on features, et cetera. So in a nutshell, we're certainly using these technologies as a way to achieve our goals as a product development organization much more quickly.
That's great, Joe. And even though this was the banking experience, exactly what you described could be the same experience for our clients as well. Taking these, repeatable activities that are being performed by individuals and finding ways to automate those functions will free up their time to help grow their own businesses. It's some great examples there. Back to you, Adam.
Absolutely.
Yeah, no, I think that's a great point, Adam. I think there's a lot of learnings that can be shared across organizations from the bank's perspective as well as kind of with your corporate clients. So it makes a lot of sense. And kind of building on a lot of what Joe was talking about, right? So we have a lot of this great underlying technology that we just talked about, and kind of referencing a point that I made earlier around when you're able to kind of stack these and combine these, you start to get this multiplier effect that really manifests in whole new customer journeys and customer experiences, right? So we've kind of outlined three different ones right here. And I'll just kind of talk about them briefly. I like to kind of think about this as the so what, like as a corporate, so what does this mean? What does this mean to me? What can I expect coming from all of this, right? So the first thing you might expect is more of an omni-channel kind of seamless digital banking experience, right? And one of the main things there that Joe talked about is as a corporate treasurer or someone in the finance function at your organization, I know a lot of my day is spent within an ERP system or a treasury management workstation or maybe even like, leveraging a lot of the great accounting software out there. I find myself having to kind of go back and forth between that and my online banking, right? Does that need to happen? And the short answer is no, it doesn't necessarily need to happen, because these platforms can talk to each other via API, right? And you can kind of make that experience much more consolidated, consistent, so you're not having to kind of juggle across these two different platforms and things like that. So along with that as well, when it comes to the digital banking experience, a much more personalized user-based experience across the multiple platforms, as well as layering in the kind of these new services when it comes to RTP or a number of different, let's say, automated payables or automated receivables types products that are getting more traction in the industry. The ability to get those pushed out and seamlessly integrated into your online banking experience via the cloud and in APIs as well. Much different experience now that we can kind of expect and that we're working towards than what we've had over the last decade or so, 5 to 10 years. The second one is around automated account opening. Again, I know probably a pain point. It's a pain point at many banks that a lot of corporates have to go through in terms of opening the account, getting onboarding into the different treasury products, things like that. The use of APIs, analytics, and bots here, specifically some of the underlying technology of robotic process automation and natural language processing, considerably shrink down the amount of manual inputs, as well as the time to get approval and fully onboarded onto the account, to the products. Expect to shrink significantly through leveraging these technologies. So a process that could typically take weeks or maybe even months in the past, down to days, right? So I think the ability to kind of get up and running using those products is a significant value add when you think about this kind of new experience here. And again, not as many data entry points, leveraging a lot of the data that is already inputted and kind of bringing that all together. And the last one is around this customized industry solution. So obviously, I would say a very hot topic in terms of understanding that there's a lot of disparate and industry-specific problems and platforms and solutions out there. We've highlighted, I think, healthcare and property management, both from a kind of a data security or account opening and kind of a lot of the different items or specific products needed to operate in those industries. Being able to kind of create this tailored products suite and tailored journeys and insights around these specific industries that you're in. Again, the ability to kind of leverage cloud and API to do this and analytics to do this is a step function improvement from what we were in the past. And to talk about the point that Adam made earlier, and I think Jackie tagged on to, this idea of key enablers, this customer-centric, collaborative, agile design thinking process is essential to making these journeys the most relevant to U.S. customers, right? There is some inherent more difficulties, I would say, within the B2B space than there is kind of on the consumer side. When you go through these processes, you might be dealing with a lot of different personas, different jobs at organizations. Designing an experience for a CFO and a corporate treasurer might be much different than what it would be for a person that's in charge of accounts payable, let's say, or accountant on your team, right? So being able to do this process and understanding the different personas and the entitlements and solving for that is an important process here. And it's very encouraging to hear that the bank has made steps to doing that. Okay. So that kind of brings us to our next major trend here, which is navigating the new liquidity environment. And how has digital products and tools and electronification of treasury management really helped corporates navigate the new liquidity environment? Right? So if I was just kind of step back and look at what we mean by kind of a new liquidity environment, I guess it's not entirely new because we've kind of been in this environment for a little while now. But if you look at just what the graph here on the left-hand side is, the effective Fed funds rate. Over the last, let's say, 20 years, if you were to go 2008, so pre-financial crisis, Fed funds rate was looking at around 3.5%, let's say 3.43% on average over that time frame, with a little bit of volatility. But overall, you could expect to get something out of the deposits that you're holding at your institution, right? And of course, there's some opportunity costs here, but generally, if you're going to have those funds, you would see something in the form of interest or an earnings credit that is meaningful. Post 2008, you can see that on average we've been having almost like something below 1%, 0.65% over that time frame, right? And while we were starting to see it creep up over the 2017, 28 time period, we started to see a little bit of economic contraction, or at least pessimism in the economy in 2019. And then, of course, with COVID, we find ourselves right back to where we were kind of coming out of the financial crisis, right? So what digital tools are out there that can help corporates better understand the liquidity and make smart choices about how they're going to deploy those working capital funds? Really where we see a lot of the emerging products, and what you see on the left-hand side here is from the survey that we did with various banks throughout North America in terms of understanding the deployment of these types of liquidity management, information reporting tools, analytics tools with their customer base. So ask them essentially, do you have these tools in market? Do you plan to offer them within the next 12 months, or do you not really consider having or deploying them in that time frame? And there's this set of core info reporting products when it comes to intraday balance reporting or online statements, sweeps and ZBAs and PositPay, probably a lot of the tools that a lot of you out there are utilizing right now within your online banking platform. But there is this other set of tools that are out there that are really emerging, and it's around multi-bank reporting, cash positioning, cash forecasting tools, as well as virtual account management, which is pretty nascent, but I think a powerful tool that'll help allow corporates to create a number of different virtual accounts and the structuring of those accounts that can help with understanding your position across multiple accounts, but as well as the hierarchy and the structure of those that can really help with things like reconciliation, for example. So a lot of really interesting things that are happening, and they're happening because, again, of this combination of APIs, analytics, user-centric design that we mentioned earlier, that is kind of creating this amount of transparency and better insights for corporates out there. And particularly, I think, relevant to those within this middle market segment, which we define kind of in this 20 to 250 million in annual revenue, where maybe a little bit you have some more sophisticated needs from deploying your funds, but maybe aren't kind of fully scaled to a fully comprehensive ERP or treasury management workstation, and get a lot of the insights from your online banking, from your banks, right? So I think this is kind of where a lot of these new products and services that are emerging can have some benefit.
I'll jump in here. So if I were to kind of paraphrase, Evan, what you shared, I'm seeing two major themes. One is around more robust reporting that's in demand, and some more sophisticated account management tools such as virtual accounts or sub accounts. Maybe if we were to start on the reporting side, Jackie, what kind of demand are you seeing for reporting amongst your clients, and kind of, in what form are you seeing it?
I think when our customers are, again, reevaluating their processes, they're seeing that they need to also make a reinvestment into their own technology. So we're seeing an uptick in customers investing in their accounting software, upgraded accounting software, purchasing a Treasury workstation, and the need for secure file transmissions for reporting and even for money movement have been more and more. We're getting more and more demand, when maybe it was, 1 out of every 10 to 15 customers in the past. I would say it's probably about half that are looking for a file transmission technology at this point. So we are absolutely tasked with working with files. As we all know, one can be completely different from another. So there's a lot of time and effort that goes into that, but it's certainly working towards the the digitization that we're all seeing and that you're speaking about, Evan, throughout the presentation.
Wow. So as many as half are now asking for some kind of connectivity, and you're seeing it on the file side. Earlier, Evan, you talked about APIs, and then Joe, you kind of expanded upon it. Joe, what do you think some of the benefits would be for clients to shift from exchanging data in a file-based approach to an API-based approach?
Sure. So a couple things, Adam. I'd say first off, that integrated real-time exchange of information, be it account reconciliation or transactional or just other reporting, that access to data kind of in the moment provides for a much more empowering customer experience. I imagine the corporate treasurer, Evan mentioned earlier. I imagine the corporate treasurer who's closely managing working capital and has inputs coming from multiple institutions. Getting a real-time cash position from their financial institution. Coupling that even with a real-time payments feature, and the idea of almost a real-time ability to manage liquidity starts to look possible, and that's certainly a much more empowering customer experience than what we have today. Not to mention the opportunity to streamline their operations. Now that you have less files traversing multiple systems and having manual touch points, you have these direct feeds into your system. So I say those are the two key benefits that jump out when you think about transmitting information via API.
Oh, those are great examples. Yeah, I just want to hit one more item on here before we move on. I think we're good on time. The virtual account management piece, to see that only 3% of surveyed banks have a solution in market, and that almost 70% it's not even on their radar. It was surprising to me. I'm curious, Jackie, your reaction there.
Yeah, it was surprising to me as well. I mean, we were quite a bit ahead of this curve, actually. So we've had a sub-accounting portal for about 4 years now, which I would say is a pretty robust offering. It focuses primarily on escrow, tenant security, 1031, account management type of sub-accounts. But I would say that this is somewhere where we're ahead of the market, and many in the market are catching up here. We definitely saw consistency in volume throughout COVID here. It was certainly an added convenience for customers that were on this type of portal already, since you were able to operate completely remote here. Everything was completely virtual and digital. So it's been a really great experience for our customers for the virtual account management piece.
That's great. Thanks, Jackie. All right, Evan, back to you.
Sure.
Yeah, no, thank you all for the color there. When I'm thinking about, some of the core responsibilities as a corporate treasurer when it comes to liquidity, I mean, it is around meeting your obligations from a working capital perspective and managing risk, but also, maximizing the returns that you can get, right? So deploying that money in a smart way, and to the extent that a bank partner can go and help you understand, help those insights, help you understand your positioning and what you can free up essentially to go maybe invest in a money market fund or something of likely higher yield, I think is a tremendous opportunity for banks to be helping their corporates out, and corporates should be kind of actively looking for that type of partnership and that type of consultative advice and tools that help facilitate that. Move on. I would say one of the more interesting things, and kind of tagging on to that idea of searching for yield in this environment is cryptocurrency, right? And the appetite that we see now traditional corporates having with investing in some of the larger cryptocurrencies out there, so a Bitcoin or an Ethereum or others. Looking at kind of the market here, dating back to kind of 2017 and even before, obviously crypto was very much held within the retail space. So individual customers holding specific specific coins, currencies within their wallets, and kind of using that as an investment strategy or store of value. Over time, we've seen the institutionalization of that creep up, right? So whether it was crypto hedge funds or crypto-focused startups, we've kind of moved down this spectrum into what we're seeing now, a lot of traditional corporates starting to at least dip their toes in the water. They see a lot of the returns that are happening with things like Bitcoin, and they understand that if they don't necessarily need to have some of these funds locked up into their working capital and they're meeting their obligations, is this a smart investment? And for many of them, it has been. Now, of course, this isn't for, I would say, of course, off the bat, this is not for everyone. You look at a lot of the companies on here, MicroStrategy, Square, Tesla, they're very tech-focused companies that have a much higher appetite for risk, I would say, than your kind of average corporate. But having said that, I do anticipate over time I don't want to say stigma or taboo around this, but essentially it will become more accepted in an everyday sense, where at least there's going to be some level of exposure from corporates to cryptocurrencies, and using it as an investment strategy, but also a kind of a store of value and hedge against inflation. So the last kind of major theme that we'll hit on here, and I know we'll probably have some questions coming in, so I want to make sure there's time for that, but this finding efficiencies in the financial value chain, right? So how can these digital innovations and the new digital products that are being introduced into the system, how can they help me as a corporate save costs, save time, save resources, create a much more streamlined experience when it comes to this value chain, right? Some people call it kind of procure to pay value chain, but it's just kind of around this total payments and financial value chain, coming from all the way from sourcing and contract and procurement to invoicing reconciliation. You have these kind of three areas where banks typically play around financing, payment approval, payment execution, and then lastly around kind of matching, right? So the general thought of this is that this has been a very fragmented process earlier. It's almost kind of one of the first things that we talked about around the friction of payment. Are there ways in which we can build more end-to-end tools or platforms, either through ground up building, through strategic partnerships and acquisitions, that will essentially allow corporates a much more integrated experience across all of these things? And again, the benefits to this, accomplishing this, is enormous in terms of the cost savings that corporates can get out of this. And again, it goes back to this idea of this value chain and these processes being based on a set of tools and a way of doing work, work across kind of payment and accounting that are somewhat antiquated, or they don't necessarily need to be the way that they are. So can we do a kind of a full reimagination of this process using the 21st century tools that we have at our disposal right now? Okay. If we were to kind of think about, again, a little bit around all the different players, again, still somewhat fragmented, but becoming more consolidated through organic growth of these companies and the solutions that they're offering, but also through, again, strategic partnerships and acquisitions. If I was to look at, scroll down to where the banks typically play, again, in this idea of financing, payments approval, and payments execution, but looking to helping out with the invoicing and the reconciliation process, right? Even leveraging some tools that might even help them with corporates with the contracting and procurement, right? So this whole idea of players expanding across the value chain to help create this more integrated end-to-end solution.
Evan, I really like this slide. I think it's very cool to see how the banks and fintechs can all work together. And it reminds me of your very first slide, where you talked about how it used to be that payments was just a standalone function. But now the expectation is that's part of more of an end-to-end I think he called it like a money movement journey. Joe, maybe you can talk a little bit about this, representing, how banks can now integrate with, our clients and with their third party technology companies to create that, industry specific experience.
Yeah, sure. So, Adam, as we talk through this, I imagine the healthcare portal scenario. So you think about a portal where a client wants to go to a healthcare portal to schedule their appointment and fill out the paperwork and the HIPAA disclosures, view the test results, submit their insurance information, et cetera. But potentially also being able to view and pay their bill. And, by being able to embed our banking services into a client's portal or their ERP, provides for really a more comprehensive client experience, both for our clients and their clients using the portal. So I think that's one example where we're able to embed our services into a broader offering, and that kind of creates that end-to-end experience that Evan referenced.
That's great, Joe. And I'm monitoring the chat here. We do have a question that came in, and it referred back to, Evan, if you're able to go back to slide 9. There was a question about, it was on the reporting slide, reporting in virtual accounts. There you go. And the question is, this shows how the banks are doing now. What are the banks doing now or planning to do in the near term? Can you clarify the weightage on these and how this helps banks?
Yeah, sorry. So if I can clarify the question, I guess, again on this is that how are the investments in these products and the deployment of these into the market, how this is essentially helping banks?
Yeah, that's how I'm interpreting it as well.
Okay. Yeah, so to me, I think this is, whenever we do these surveys, I'm always surprised at some of the growth of some of these products in general, I would say. So something that you would think is a niche product one year, all of a sudden has massive adoption or massive expectation to deploy in the next 12 months. And so quickly in this space, something that becomes emerging or niche becomes table stakes in 3 years, right? So the way I kind of view this is that it is a natural evolution of which banks need to be thinking about constantly evolving their product suites to meet the evolving needs of their customers, right? So it is very apparent that corporates are demanding the ability to, consolidate their holdings across multiple banks into one consistent view to allow them to deploy their funds in a better fashion, right? There is, very much a demand to understand, based on their historical payments flows, what their cash is going to be like over the next 6 to 12 months, right? There is very much a demand on the virtual account management side to be able to structure, generate and structure accounts in certain hierarchies and have the control as a corporate to be able to kind of do that in an easy to use process, right? And not necessarily having to interact directly with people at the bank to kind of go through that process, but me having a much more control over kind of what the structure of all of my accounts look like, right? So I think, generally what the banks get out of this is that it further deepens their customer relationships. It makes sure that they're staying kind of competitive and meeting the demands of their customers. And again, I think a lot of this is true value-added services where ultimately they're providing a needed, valuable service to their corporate customers, either through that's allowing them to find efficiencies or generate higher yield, and generally just having kind of a more pleasant interaction with how they're dealing with their funds.
Thanks, Evan. When I think about liquidity here, it's almost like there's the liquidity around your dollars, but it's also the liquidity of your data, right? There's an expectation of sort of a fluidity of information flow that all banks are going to be challenged to provide that level of integration and instant access to empower the various industries that we provide services to. And that will challenge banks to make sure that they're not a commoditized service that's just, opening accounts, storing money, and moving money. There's a real technology component to it. So I appreciate
I think that's right. Yeah, and I think that resonates a lot with where I think banks want to go. I think they value being a trusted advisor, being a source of insights for their corporate customers. Right? They don't want to necessarily just be I'll use the plumbing to facilitate a payment, if you will. Right? I think there is this idea of the broader relationship and getting true value out of being able to help their corporate customers with these things. And I think a lot of this also just through this digital evolution, I think it brings up just the question across all of us of why. Kind of why does an old process have to be the way it is? It kind of helps us kind of reimagine what it could be, as opposed to kind of just being complacent with what things have been like in the past. So.
That's right. Now, Evan, as my role as moderator, I also get the role as timekeeper. Lucky me. So we've got about 4 minutes left. So maybe we'll finish up that last slide, and if we can sneak in a question, we will. If not, we'll bid adieu.
Sure thing. Yeah, and I think this is really just meant to kind of bring everything home, right? I think when we think about the future of treasury management, it is smarter, it is faster, it's more connected. By the ability for banks and fintechs and corporates to work together to deploy these in a smart way. I think the future of treasury management is very bright. Again, I think if I was to even fast forward 5-10 years down the road, it'll probably look much different than it does today in a good way, right? So again, just around the ability to move funds quicker, faster, faster, have more accessibility, smarter. This is kind of the future that we see in terms of treasury management.
Since the bottom right corner is on faster payments, I'm going to try and sneak in. We had one other question, and from the audience, there was a request for just a better understanding of the benefits for clients to adopt RTP, since it's coming around the bend. Maybe Joe, you can address that, because I know you're spending a lot of time focused on RTP these days.
Yep, sure thing. And I'll condense it to 2 minutes, Adam, I promise. So I'd say two things. First off, certainly that concept Evan introduced earlier about enhanced site and deployment of funds. That's certainly a powerful benefit of real-time payments. I think the other piece, though, is around, in speaking with one client, they mentioned the fact that now that they had optimized their operational processes around real-time payments, one of the things they enjoyed was being able to decouple their operational schedule from the Federal Reserve, and as a result, the financial institutions cut off times for things. They could submit things when they wanted to, but otherwise focus their operational folks on the things that they needed to run, and not have to redirect everyone to get the file out the door to get wires out before the cutoff. So those are two quick points I've heard from clients that I think makes the real-time payment feature interesting.
All right, great example, Joe. And we're right on time here, so we're going to wrap up. I want to thank Evan, Jackie, and Joe for an excellent presentation and exchange of ideas. Thank all of you attendees for carving out time from your busy schedules to join us. Hope you enjoyed, and wish you a great rest of your day and a happy Earth Day. Thanks all.